Go. Hello and welcome back to The Note. We've had a relatively calmer day on world stock markets today. Virtually all of them are up, with the very significant exception of Japan. Meanwhile, we continue to see falls in commodities, particularly oil, with crude actually dropping below $30 per barrel briefly in New York trading. Now, that problem of assessing the damage to the oil market also vitiates the earnings season, which is just getting underway. If we take a look at this chart, you can see that obviously over the last 18 months, energy stocks have done terribly. But if you take a look at how the S&P excluding the energy sector has done, yes, it's done better than the S&P as a whole, but not all that much. The market is still distinctly flat to negative in the last few weeks, over the last matter of months. In fact, even if you exclude energy. Now, energy has a big impact, obviously, on earnings expectations. The forecast, according to Thomson Reuters, for fourth quarter earnings is that we will see a significant decline compared to the fourth quarter of 2014. That's almost entirely due to a catastrophic fall in energy companies' profits. If you exclude energy, people are expecting a rather anemic but still positive 1.1% gain. Now, that should be a low enough bar that, as we've seen in other recent earnings quarters, your earnings seasons, you will see quite a recovery as companies manage to beat that bar. But given the degree of concern over the global economy, you do need to see them do a little more than that. And as exhibits A and B, let's look at the first two companies to have announced, which are Alcoa, the aluminium company, and CSX, which is a large US railroad. Now, talking about just these two companies is a little bit like political pundits talking about Iowa and New Hampshire as though they're particularly representative of the US. Obviously, they aren't. In the case of Alcoa, they're very, very dependent on commodities. They're a commodity producer. CSX makes a lot of money taking coal around the US. It's seen a very sharp drop in its coal volumes. But what is interesting is how those earnings have been received. In both cases, the expectations were for poor earnings. In both cases, they managed to do better than that, but didn't sound at all optimistic about the future. Now, in the case of Alcoa, we saw a fall of almost 10% today after their results came out. In the case of CSX, which announced only after the market closed today, we did see a sharp fall despite the fact that they had beaten their earnings expectations. I think that is a foretaste of what we will get from this earnings season. Yes, there is every possibility with such a low bar to beat that we could see a rally as companies manage to surprise on their earnings. But people really care about revenues. They really care about forward-looking forecasts, and any company that fails to deliver on those fronts is going to get punished.